Hey everyone, it's Rob, and for today's video I wanted to talk about the anatomy of a hyperinflation of the currency and a market crash. And I'll be looking at Argentina, and I'm going to be looking at what's going on in Argentina right now in 2018. I have an article here from June 8th of 2018 on Business Insider about Argentina getting a $50 billion bailout from the IMF. And it's the largest ever, the largest credit line the IMF's ever given out. So one would think, okay, that's the largest credit line the IMF's ever given out. That definitely would give a lot of liquidity injected into Argentina's system, give the government time to make some structural changes and address the issue, and maybe make things better. And maybe at least a couple of years, you would think that's a lot of money, $50 billion for a country the size of Argentina. Well, it didn't exactly work out that way because the problems continued. Here we have the Argentina yield curve for their bonds, and we have it from 6 months ago, 1 month ago, and then today. And you can see the rates have risen at every maturity. So here you have 2-year, 4-year, 6-year, all the way up to 30-year. And of course, 6 months ago, the rates were the lowest, around 5% for a lot of these issuances, up to over 15 for the 4-year. Then a month ago, they all spiked from 20 to 25%, and now, today, they were trading at 25 to 30. So what happened to all that money? What about all that liquidity helping Argentina solve its problems? Well, obviously it hasn't, because this rate is basically what an investor is telling Argentina they need to pay them yearly, an annual rate, to buy their debt. And you can see the 4-year is the most important one. I think people are really worried about the next 2 to 4 years for Argentina, and not just the next year, and that's why the rates spike on the 4-year and then they fall afterwards. I think people are willing to take a little bit less money after the 4 years. They probably figure, well, maybe Argentina will solve their problems. I wouldn't necessarily bet on it because the currency is hyperinflating, and I'll show you that here in the next chart. When the currency hyperinflates like this, the governments are basically going to devalue their currency, and that's going to affect the value of the bonds that you're holding, even if you're getting these high interest rates. So what happens to a currency when a market crashes, like Argentina's did? Well, this chart basically shows you, it's from trading economics, and it's the US dollar to Argentine peso pair. And the pair means that we're looking at the peso compared to the dollar. And since the dollar is first in this pair, it means that if the chart goes up, the US dollar is strengthening relative to the peso, meaning the peso is falling when the chart goes up. If the chart goes down, then the peso is strengthening relative to the US dollar. And if we're going sideways, the peso and the dollar are about evenly weighted. As you can see, from about 2004 to, I would say, about 2017, the value was relatively stable. There was a slight uptick from 2014 to 2017. Now, lately, in 2018, you see a spike, and then, of course, here's the loan money that the IMF provided. Then you saw another spike, and then you saw a lot of volatility here, and then boom, straight up on the chart. This is what we call a hockey stick. That's what happens when financial systems collapse. It goes very, very slowly, uptick, and then something's done by an outside party or by the government to try to address it that buys you a little bit of time, and then boom, goes right back up. And it kind of stair-steps, and then it goes vertical. This is very common on hyperinflation charts, currency hyperinflations. And that's what's happened to the peso. So the peso's not worth a whole heck of a lot anymore. It was, there was about 4 pesos to $1 for the longest time, and now it's 40 pesos to $1. So the peso is worth about 1/10 of what it was in 2017. Even with the IMF providing Argentina $50 billion in bailout money. Okay, so one of the key points here is when you're looking at a currency chart, it's sort of backward looking. It's reactionary, meaning all these structural issues that led to this were put in place during this time when the peso, was relatively stable to the US dollar. And then once it started to break down and fall apart, that's when you saw the currency really jump up in a very short period of time. So you have to be careful looking at these charts because especially the currency seems to always act this way in the hyperinflations. It'll rise a little bit more than usual. You'll read some headlines, maybe the economy's not doing quite so well, but you think, it's stable. Then something happens. You have a jump, a sharp jump, Then maybe the IMF comes in to provide funds. Trading partner provides funds. Maybe the government, opens the spigots, especially if you're US dollar and you're the reserve currency, opens the spigots and starts printing money. And then what happens? Boom. You add all that extra liquidity. It's like fuel to the fire, and then there goes the currency. And it doesn't look like that peso is going to recover anytime soon because structurally Argentina hasn't addressed their issues. So I see no reason for the peso to strengthen. Zero Hedge has an article here that was printed on the 9th, which is showing the bank run. And the title of this is Visualizing Argentina's Bank Run in One Crazy Chart. So in August, here's the print. Here's people taking their money out of the system. Here's the change in savings. It was up and down, but mostly up. People putting the money into the banks, and now boom. And why that happens is when your currency is hyperinflating and it's 1/10 of its value, as we can see in this chart, people understand that whatever their interest rate they're getting in savings, leaving their money in there, is not keeping up nearly with the devaluing of the currency and its purchasing power. So they start taking it out, and what happens is it makes the banks insolvent. So it's going to compound itself. Now, even with the IMF money to help shore up Argentina's financial and banking system, people are pulling their money out, and that's going to compound the issue, and it's going to make a lot of banks insolvent. So we're going to start seeing more bank closures and bank failures, and the government's not going to be able to do anything about it. And it's going to start to ramp up and get faster. And one of the key things to remind you guys about is, remember, it was relatively calm here, and then boom, it happened so quickly. And then the collapse of the banking system now is going to continue to ramp faster. So once it happens, you don't really have time to restructure your finances or get out of the system. You have to begin getting out of the system before that. You have to look at the warning signs before that. And in my basics economics series, Personal Finance, I talk about some of the signs that you can look at to see how the economy is doing when the currency looks relatively stable, or maybe even the US dollar is getting a little stronger on the chart, and you're like, well, everything's, when the stock market's going up, everything seems fine. Well, I taught you how to look at bonds and commodity indexes, trade-weighted currencies, and a lot of other things to really look at a broader picture. So go take a look at that series on my channel if you want to understand what some of those indicators are that help tell you ahead of time when to pull your money out of the system and start to protect yourself. So there's the bank run. And I want also to look at the market. So stock markets do funny things when you have a collapse and you have a hyperinflation of the currency. Now, depending on how the collapse happens, different things can happen. You can have a stock market crash, which will lead you into some sort of recession. But you can also see the stock market go up. So since January of this year, the Argentine stock market, the Merval, has fallen from 35,000 to 25,000. That is about a 30% drop, not quite a third, 31% in that range. That's quite a big drop. That's definitely recession territory. But look at what happens when that currency hyperinflates. Here comes the hyperinflation of the currency. What happens to the market? The market goes up. It spiked back up to its previous high in the last few years. Why does it do that? Well, because as the local currency is devaluing, the stock market has to go up even more to maintain any of its relative value. That's why when you have an economic crash and you have hyperinflation, a lot of times that stock market will go up. And in previous hyperinflations of currencies, that tends to happen a lot. But what happens is the market never keeps up with the devaluation of the currency. So even though the stock market goes up 50%, the currency will devalue 80%, 100%, 200%, 1,000%. And so that increase in the stock market doesn't really make up for the losses in the currency. So when you have a currency issue, which again is reflected in the bailout from the IMF and then the bond rates, you want to begin pulling your money out of the stock market because, well, first of all, you're going to have this tick down, but then you're going to have the spike up when the currency starts to hyperinflate and you get into that quickening period of the crash. But even though it spikes up, it's not going up enough to make up for the difference in the loss of value of the currency. So you don't necessarily want to be in the stock market when that happens. And eventually the stock markets tend to crash back down again after the hyperinflation has really run its course and the reset occurs. The market will have crashed by that time, And then there might be some valuable investments to go hunting for in the market at that point in time. But you want to stay out of the stock markets when you have a hyperinflationary episode like Argentina is having with their peso. So that's it, ladies and gentlemen. That is the anatomy of a crash and a hyperinflation and what typically happens in those cases and what could be coming to the U.S. if we have a major market crash. And the U.S. dollar loses its reserve currency status and we go into some sort of hyperinflation, which I've talked about in my book. If you liked the video, please give it a thumbs up and subscribe. And until next time, this is Rob on the Sui Juris channel.